Okay, hi everyone. We're just going to wait just a few seconds longer and let everyone join in since we got a bit of a late start, but we're good. We got plenty of time for today. Okay. All right, we're going to go ahead and get started. Thank you everyone for being with us. I'm Cindy Nellis, and we welcome you to our webinar on sales tax basics. As many of you are getting your businesses set up and ready to go, we want to make sure you have a solid understanding of Pennsylvania sales tax. Your questions may be, who needs to be registered to collect? What items are taxable? When does sales tax need to be charged? Or where do I file and pay? And what should I do to keep proper records? So today we will answer all of these questions and more, as well as learn about sales tax exemptions, use tax, and resources to help you every step of the way as your business grows. The Pennsylvania SBDC is happy to partner with the Pennsylvania Department of Revenue to present a four-part series offered monthly. Today's topic is sales tax basics. The other three topics are getting started with MyPath, PA taxes for new businesses, and withholding basics. So we hope that you plan to join us for those other three topics. And as you can see, we're finishing out the year with withholding basics next month, and then we'll roll into 2026 with the same series. So today's webinar is being recorded, I believe. I'll make sure. And then we will share that recording with you along with the presentation slides and the webinar series. I just want to make sure that we are being recorded. Yes, okay. As a participant, you've been muted. Your video has been disabled. So if you have a question for our presenter, please enter it in the Q&A. Rachel has a team with her to help answer questions while she is presenting with us. But if you have a question for me, your host, I would just ask that you use the chat feature for that. And if there's some interaction of questions, we may use the chat for that as well. So first, I'd like to introduce you to the Small Business Development Center program. We are grant funded. Our mission is to help businesses start, grow, and prosper. We're here to provide you education, information, and tools to help you, our business owners, make better business decisions. We do this through our one-on-one business consulting services and our training. Our consulting services are provided at no cost and confidential. Our training seminars are offered on a variety of topics that target our small business owners. And to us, a small business is generally defined as a business with less than 500 employees. We also use our funding to provide you access to database information, typically related to marketing strategies, financial analysis, and market research. And in addition, we partner with many economic development organizations to help connect you with many more resources to help you as you start and grow your business. In Pennsylvania, our network is made up of 15 centers, all located at institutions of higher ed. We're also a part of America's SBDC, which is a national network of SBDCs that enable anyone across the country to access our program services in their neighborhood. The Small Business Development Center is a place to turn to for no charge business consulting, helping you set up your business, answer your business related questions as you operate your business. And so these are ways to get in contact with us, our statewide network, my particular center's website, as well as my email, phone number, and my center email address. So Know that there's no wrong door. I'm always happy to connect with you and get you connected with the center right in your neighborhood. Okay, with that, I'd like to turn this over to our speaker, Rachel Washington, who is a research analyst in the core division of the Customer Experience Center at the Pennsylvania Department of Revenue. So Rachel, I'll turn it over to you.
Thank you, Cindy. Let me go ahead and share my screen once you're done here.
Yep, there you go.
All right. Let me make sure I share the right screen. Here we go. And share. Let me know if you can see it all right.
Yep, it looks great.
Sounds good. All right. So thanks, Cindy. Hi, everyone. My name is Rachel Washington. Thank you for joining us today. And a little bit of background about me. I am actually an administrative officer now with the core division of the Customer Experience Center for the Department of Revenue. And today we will be discussing how to properly collect and remit Pennsylvania sales tax. So, one thing we do want to emphasize in our presentation series is that the cost of noncompliance far outweighs the cost of compliance. So, let's get started. Our agenda for today will cover a wide range of information regarding PA sales tax and the nuances that go into it. We will define sales tax and what items and services are taxable and not taxable. We will discuss who must collect sales tax, define nexus, and review exemptions. We will go over use tax, how to register for a business tax license, and how to remit the tax to the department. Lastly, we will go over some resources that will help assist businesses with sales tax. All right, so let's begin. What is sales tax? Sales tax is a 6% tax on the sales within this Commonwealth of tangible personal properties, services to tangible personal property, and certain enumerated services. We will talk about each of these points individually, but before we do, let's explain what we mean by a sale within this Commonwealth. If you buy an item at retail and the item is delivered to, used, or consumed in Pennsylvania, then the sale occurred in this Commonwealth. If a business sells and delivers an item to an out-of-state location, then the sale was not made in Pennsylvania and is not subject to Pennsylvania sales tax. As you can see on the map, Allegheny shows 7% and Philadelphia shows 8%. This is because of local sales tax. During the 1990s, the Pennsylvania legislature passed a new law imposing a local sales and use tax on certain counties. This was a tax imposed in addition to state sales tax in Allegheny County and the city of Philadelphia. The rate in Allegheny County is 1% and Philadelphia is 2%. These taxes are deposited into a fund dedicated to pay for specific needs of those jurisdictions. The rules are the same except that the local tax is based on the place of sale, not delivery. So, for instance, if I buy a meal in Philly, I will be charged a total of 8% combined state and local sales tax on the meal. If I live in Montgomery County, so right next to Philly here, and I order furniture from a store in Philly, the additional 2% local sales tax will be added based on the location of the store where I made my purchase. So, since we know what sales tax is, let's discuss what items are taxable based on PA tax law. Tangible typically means something material or physical. Tangible personal property is generally physical property that can be touched, such as furniture, clothing, and vehicles. However, there are items that cannot be felt but are still considered as tangible property, such as electronically delivered software. It's distinct from real property or real estate in that it can be moved from one location to another, while real property is permanently attached to a single location. These are some examples of taxable items listed in the law. Some of these are clearly tangible, such as greeting cards, helmets, and books, while some, like telecommunications, are a bit less black and white. There are also examples here on the screen that are not specifically in the law, but they help to illustrate what kind of items constitute tangible personal property. You can see how wide-ranging these items are. If you buy any of these items or similar items in PA or have them delivered into PA, they are taxable tangible personal property. A more complete listing is available in our REV 717 booklet. Sales tax is also imposed on services done to tangible personal property. Basically, the rule is if the item that needs serviced is taxable, then that service itself is also taxable. For example, if my watch breaks and I take it to a jeweler to have it repaired, that transaction is subject to sales tax. Since watches are subject to sales tax, or taxable like we like to say, then the repair service needed to fix my watch is also subject to sales tax. So this slide shows other examples of services that are taxable, which may help you better understand this concept. So to highlight an item, the first item, wrapping or packaging tangible personal property, is referring to the service of wrapping tangible personal property such as gift wrapping. This is considered taxable in Pennsylvania. Enumerated services are those services specifically taxed. These are not tied to tangible personal property, but they are specifically identified for taxation by legislation. These can get very involved, and some have very special rules on how to determine their taxability, but all of these items are specifically outlined in the REV 717 I mentioned earlier. So we recommend that you check that out if you are providing any of these services. And I'll give you a second here to take a look at these. Alrighty. So, since we discussed what is taxable, let's quickly review non-taxable items. There are certain items of which sales tax is excluded per the sales tax law. The exclusions include the following: wrapping materials that are needed to deliver property, such as bubble wrap, pallets used to transport goods, shrink wrap, and things like that. Anything wrapped with the package or used to deliver the package is considered exempt. Grocery store food is not taxable unless it is considered ready-to-eat food, such as sandwiches from a deli. Clothing that is considered everyday wear is not taxable. Everyday wear items are articles of clothing that are not required as a condition of your employment, like a uniform, and considered to be your regular clothes. These everyday wear items are not subject to tax. Caskets that the funeral director uses in conjunction with the funeral service are exempt from both sales and use tax. Regular unflavored water, including mineral waters, are also exempt. And then we have sales for resale. This is a big one for many businesses. Industries like department stores, grocery stores, automobile dealers, and things like that are in the business of buying goods and reselling the same goods. In PA, if the inventory or goods that you are buying is for resale, you are not required to pay sales tax, given that you will charge the tax to the end consumer. So, who should be collecting sales tax? The Tax Reform Code states every person who maintains a place of business in the Commonwealth to sell tangible personal property or perform taxable services is required to be licensed for and to collect sales tax from its customers. So, in other words, the law requires Pennsylvania businesses to collect the tax from the consumer at the time of sale. However, what it means to maintain a place of business has actually changed over the last several years. Whoops. Nexus is when a business has either a physical presence or economic presence with Pennsylvania. Sales tax nexus is just a fancy way of saying significant presence in a state. If a business is considered to have nexus in PA by having either a physical presence or economic presence, then they must collect sales tax on all taxable sales to PA customers. So, physical presence. For any entity to have physical presence, it means exactly that. To fall under this category, a business must have taxable sales and have some type of physical location, like an office or place of business, an employee, which includes a representative and independent contractor, stored inventory, rented or leased properties, and tangible goods. Meeting the qualifiers for physical presence means the business would be maintaining a place of business in this Commonwealth. This is going to apply to most of you guys. Most of you attending today will have a physical presence in PA. Let's quickly revisit bullet point 3. Goods or inventory in a warehouse. Under Pennsylvania law, inventory stored in a warehouse, fulfillment center, or any other location within Pennsylvania creates a physical presence with the Commonwealth. This means that retailers who have inventory stored within Pennsylvania are required to register to collect and remit Pennsylvania sales tax on any sales made by the retailer directly to Pennsylvania customers. We are highlighting this one specifically because many people who sell online are not aware of this. So even though you sell through a marketplace facilitator and the goods are stored in one of their warehouses, but the end consumer is a PA resident, you have a physical presence in the state. So then, speaking of online sales, this is actually a perfect way to transition into economic presence. Even though an entity might not have a physical presence in PA, they may have what's called economic presence. The Tax Reform Code defines maintaining a place of business within this Commonwealth to include having any contact within this Commonwealth, which would allow the Commonwealth to require a person to collect and remit under the Constitution of the United States. This statement is referring to economic presence. If a business makes $100,000 or more in annual PA gross sales, then that business would be considered to have economic presence, and they must collect and remit Pennsylvania sales tax. In 2018, the Wayfair versus South Dakota decision opened up the legal door to expand the concept of nexus beyond mere physical presence. In the Wayfair decision, the Supreme Court ruled that as long as a state had a uniform tax rate and did not apply the new law retroactively, and provided some sort of administrative assistance in making tax determinations and filing, economic presence is an acceptable standard in making businesses collect sales tax. So this effect is to actually level the playing field for all businesses. In short, what we are talking about here is out-of-state businesses that sell to PA customers and establish consistency in the requirements to collect and remit sales tax. Previously, when Nexus was determined solely by physical presence, these businesses would have a huge advantage over PA brick and mortar locations as they were not held responsible for collection and remittance. With the new law, out-of-state businesses are now treated similarly to PA business locations if they make over $100,000 in gross sales to PA annually. Sales tax is generally imposed by 44 other states. These states have similar concepts of physical and economic nexus as well. The main difference between these states and what was just covered for Pennsylvania will come down to the thresholds for economic nexus. Some states have a dollar threshold similar to Pennsylvania, although the dollar threshold can vary. To round it out, some states also have a number of transaction thresholds as well. So a state could have a transaction threshold of 200 transactions, and then this, or a $500,000 threshold to establish economic nexus. So there's multiple different factors that play in here. Unfortunately, we cannot provide information concerning the administration of other states' taxes, but there are resources available online to help you determine if you might have a filing requirement in another state. Now, let's discuss a few exemptions of PA sales tax. Pennsylvania law allows businesses to claim an exemption from sales tax for several different reasons. The exemptions are centered on certain business processes, and their taxability depends on who bought the item and how it is used. To claim an exemption from sales tax, you must complete the REV 1220 and disclose a valid basis for exemption. Keep in mind, the purchase must be consistent with the exemption reason being claimed. This form must be filled out to completion. You must select if the exemption is to be used for one or multiple transactions, fill in the name and address for both seller and purchaser, and select the exemption being claimed. Additionally, if the burden of proof falls on the shoulders of the person claiming the burden of, excuse me, the burden of proof falls on the shoulders of the person claiming the exemption. So you must supply supporting documentation when appropriate to support your exemption claim. If the form is missing any of this information or the purchaser signature, the seller has the right to reject the exemption certificate and charge tax, as it will be considered incomplete. So the first reason you may qualify for an exemption using the Rev 1220 is if you're an exempt entity, such as a government organization or qualified nonprofit. If an item is being used directly and predominantly by a business in an exempt business process, it will qualify for exemption as well. Exempt business processes include manufacturing, mining, dairying, farming, shipbuilding, and timbering. Direct and predominant use means that the item is used directly in the exempt business process over 50% of the time. So, for an example, a manufacturing entity purchases a forklift that is used in pre-production activities like moving raw materials, and then it's also used in production activities like moving work in progress from one workstation to another, and then post-production activities like loading finished goods onto a truck. For that forklift to be exempt from sales tax, it must be used over 50% of the time in production activities. If it is used more than 50%, if it is used more than 50% of time in activities that are not considered part of the actual manufacturing process, then there is no exemption. And finally, if you are buying goods and services for resale, you can complete the Rev 1220 to receive an exemption on the items upon your initial purchase, since you will be collecting the tax from your customer. Most of the time, this applies to retailers or wholesalers who purchase items for the sole purpose of resale. If you are deemed a retailer or wholesaler, you will be issued an 8-digit number by the Department of Revenue. So, the Rev 72 is used by nonprofit organizations, institutions of purely public charities to obtain a sales tax exempt status. It is important to note that just because you have a 501c3 status with the IRS does not automatically grant you exemption with PA. When this form is completed and approved by the department will issue a special exemption number and must be reapplied for every year. I would also like to mention that you can apply for a Rev 72 sales tax exemption on MyPath as well. This is a non-logged in function found in the registration panel on MyPath's homepage. Simply click on the hyperlink that says Nonprofit Sales Tax Exemption Application to begin the process. So when a seller does not charge PA sales tax on a taxable item to a Pennsylvania purchaser for any reason other than a valid exemption, it then becomes the responsibility of the purchaser to pay the tax directly to the Commonwealth. This is called use tax. Use tax is the counterpart to sales tax, and these situations most likely occur when the seller has no nexus in our state. As we just stated, use tax is sales tax not collected by the vendor or seller at the time of purchase and is then the responsibility of the consumer. Examples of when use tax is due is if your business makes purchases of taxable items over the internet through toll-free numbers, from mail order catalogs, and from out-of-state locations that are not charging PA sales tax. You, as a purchaser located in PA, must essentially make a payment to cover the amount of sales tax that should have been included with your total at the time of purchase. This is the purpose of use tax. The tax rate is the same as sales tax, 6% state, plus 1% local tax for items purchased in, delivered to, or used in Allegheny County, or 2% local tax in Philadelphia. Many businesses believe they save money by making quote unquote tax-free purchases from out-of-state vendors, unaware that these transactions are often assessed upon audit by the department. But since assessments include interest and penalty on top of tax, businesses in these situations have increased operational costs by not voluntarily addressing use tax obligations. All right, so in order to collect sales tax, you must have a license issued by the PA Department of Revenue. The license performs many functions, including demonstrating to the public that a business is duly licensed agent to collect sales tax on behalf of the Commonwealth. It should be noted that if a business has collected sales tax without a proper license, they should coordinate with the Commonwealth to remit the money immediately, which means within 30 days of collecting it. So the very first thing you should do is register your business with the Pennsylvania Department of State. Once you do that, brand new entities must complete the PA online business tax registration on the homepage of MyPath via the registration panel. To register and obtain a license, you need to complete the PA online business tax registration application. If you have no pre-existing business tax accounts, you can use this business registration hyperlink from the MyPath homepage without logging into your profile. If you have any pre-existing business tax accounts and simply need to add sales and use tax, you should log into your profile and use the business registration hyperlink. By doing this, MyPath will pre-populate your business's information, so you will not need to fill it in a second time. Please be aware that citations are issued for operating a business without a valid sales tax license. Under Pennsylvania law, sales tax monies collected by a business on behalf of the Commonwealth are defined as trust fund money. The money does not belong to the business, it belongs to the Commonwealth. It must be handled according to the law and to department regulations. A business must meet the timely reporting and filing requirements. Proper handling of trust fund money helps secure the success of the business by avoiding costly penalties. If you are an entirely new business to Pennsylvania, we recommend that you visit www.business.pa.gov for all your registration needs. This one-stop shop website was established to help businesses get up and running beyond setting up their tax accounts. If you already have a business tax account with us, or if you already have a sales tax license and you need to obtain an additional location, you will need to log into your MyPath profile. Registering new business tax accounts is a logged-in function for existing entities. After you log in, click on the More tab and select Register New Business Tax Accounts. This will allow you to complete the registration application for a new location. So, which type of license should you register for? If you are planning to sell tangible personal property or a taxable service, then you would want to register for a retailer license. If you're only making sales to retail sellers, you would want to register for a wholesale certificate. By definition, a wholesaler does not make retail sales to the ultimate consumer of their products. Use tax accounts are for people or businesses with an occasional incidence of use tax. This is a tax imposed on property used in Pennsylvania on which sales tax has not been paid. For example, you buy a book from a website that does not collect sales tax, you will then owe use tax to Pennsylvania. To continue, a transient vendor certificate is required for any business who is a sole proprietorship or a general partnership that does not have a permanent physical location in Pennsylvania and is selling taxable tangible personal property or performs services in Pennsylvania. A promoter license is for a person who either directly or indirectly rents, leases, or otherwise operates or grants permission to any person to use space at a show, such as a flea market, antique, coin, card, stamp show, anything like that, for the display for sale or for the sale of tangible personal property or services subject to tax. All right. So let's go over how you will be remitting the sales tax you collect. Sales tax returns and payments must be filed electronically. We strongly encourage you to use our online MyPath portal to file and pay your sales tax amounts. Not only are you able to file and pay for the current year, but you are also able to view previously filed returns, access notices that have been issued by the department, request statements of accounts that are available immediately after you submit your request as well, and send messages to the department, and so much more. Another very important function is that you can grant permission to others, like your CPA or bookkeeper, to also view information regarding your returns. You can access the MyPath portal at mypath.pa.gov, or you can simply visit revenue.pa.gov and click on the icon that says MyPath right from the homepage. Please note that you must create an account to utilize this service. Lastly, the department has third-party vendors who will provide e-filing software for those taxpayers who do not wish to use the department's e-filing options. A list of approved software vendors is available on the department's website at www.revenue.pa.gov. So there are a few important things that you need to remember. PA3 forms are not available for download from the internet, and the use of other tax forms could result in non-filer notification and/or the misapplication of the tax payment. Per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfer, also known as EFT. Failure to comply with the electronic funds transfer remittance requirements may result in an assessment of a penalty equal to 3% of the total tax due, not to exceed $500. The penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So, if every quarter you send in a check for over $1,000, you're going to get hit with an EFT penalty every quarter. When you initially register for a sales tax license, your filing frequency will automatically be set as quarterly. Near the end of every year, the Department of Revenue reviews the average of the current year first and second quarter sales, as well as the prior year third and fourth quarter sales to determine if the filing frequency needs adjusted. Semi-annual filers are those who have an actual tax liability of $300 or less annually. Semi-annual returns are due August 20th for the January to June period and February 20th for the July to December period. Quarterly filers are those with actual tax liability less than $600 per quarter, but greater than $300 annually. Quarterly returns are due the 20th day of the month following the end of each calendar quarter. So that would mean April, July, October, and January 20th. Monthly filers whose actual tax liability is less than $25,000 but greater than $600 per quarter. Monthly returns are due the 20th day of the month following the end of each calendar month. Okay, so I know this is a lot of information being thrown at you, but thankfully, the department puts out a yearly due date calendar called the REV 819, which is broken down by frequency to help you remember when your filing due dates are. You may find this form on the Revenue website. If your actual tax liability is $25,000 or more per quarter, you may be required to remit what we call accelerated sales tax prepayments. These are basically advanced tax payments made for those who have a high tax liability for the year. We will have more information available on accelerated sales tax prepayments in the future, but we have found that typically this is not something a new business needs to be concerned about right away. So, luckily, the Department of Revenue offers a vendor discount for timely filed returns and payments. The discount is limited to a flat rate depending on your filing frequency, or 1% of tax collected, whichever is lesser of the two. Businesses who are registered for sales tax may remit use tax as part of their sales tax return. If you are familiar with the return, this would go on line 6. Businesses with ongoing use tax liabilities who are not registered for sales tax should apply to the department for a sales and use tax account through the MyPath system, which we discussed earlier. Businesses with infrequent use tax liabilities may use the department's online use tax payment option right from the MyPath homepage, which again is a non-logged in function. Individuals or sole proprietorships may also use line 25 of their PA40 to pay their use tax. So just a couple of friendly reminders for everyone. Filing and remittance vary based on sales volume, based on your sales volume, and they are reviewed annually by the Department of Revenue. The state and local sales taxes are filed together. A return is still due even if no sales were made. And penalties and interest accrue on late filed returns. So let's go through some really helpful resources that we have. We've mentioned this one a few times throughout this presentation, but this is the Rev 717. This retailer's information booklet is a great guide for determining goods and services subject to sales tax. It also provides some information on some of the other topics we discussed here today, as well as topics like petitions for assessments, construction contracts, motor vehicle lease tax rates, and so much more. This can be found on our website as well at revenue.pa.gov. In here, we have, one second, that was weird. Here we have the Rev 588, Starting a Business in Pennsylvania, a Guide to Pennsylvania Taxes. This is a fantastic resource that touches on all the bases for new business owners. This guide includes information for sales tax, as well as registration, employer withholding tax, and other items that go into owning and operating a compliant PA business. All right, so here is the Rev 819, which we talked about when we discussed due dates. This is the schedule put out each year that breaks down filing and payment due dates by filing frequency. The schedule is published and available on on Revenue's website at revenue.pa.gov. You then click Forms for Businesses, then Sales Use and Hotel Occupancy Tax Forms, and you can also search it on our website. This is very, very helpful, and it's put out each year. Again, this schedule outlines all period end dates and due dates, and even provides more information on accelerated sales tax prepayment requirements. So the Rev 1611 is the form used to calculate the interest on all taxes due after January 1st, 1982. Earlier, we mentioned that interest is calculated on a daily basis. It is calculated by taking the amount of tax due and multiplying it by the number of days past the original due date, then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate for any given year is established by the U.S. Treasury Secretary and is effective on January 1st of each year. All right, so now we're going to talk about contacting the Pennsylvania Department of Revenue. So what I usually like to say with this is that the best way to contact the department always starts with MyPath. So then the easiest way to do that would be to send a message. If you are going to send us a message, log into your MyPath profile and then send us a message. The messages can be general questions about, or they can be account specific. You have the ability to include attachments, and these messages post directly to the customer's account. And you can go do this by logging into your MyPath profile, and you will see where you can find the message, and then you just click on the send a message hyperlink. If you wish to speak with someone on the phone, you can contact the Customer Experience Center directly at the numbers listed on the slide and speak with an agent specifically trained in sales tax. And you can see on the screen that we have numbers for each type of specific question that we have. So if you are an individual, you would want to call this number. Businesses, you would definitely want to call this one. This is for a property tax rent rebate program. And then if you have a MyPath specific question, if you are stuck somewhere on MyPath, this is a great number to call. And if you have any collections related questions, you would want to call these numbers here. So if you don't have time to wait on hold, you can actually schedule a call at revenue.pa.gov. Once you are there, you would click on the resources dropdown on the left side of the website and select Resources for Tax Professionals. From there, you can click on the Schedule a Call button. You will be asked to put your information in. It's usually your first name, last name, and phone number. And then you can also include the tax type you would like to discuss, as well as the date and time you would like to receive the call. Once a selection is made, the requested call will be assigned to a representative from our Customer Experience Center. So when you go through this process, you will be given specific times that you can pick from. Now, if you don't want to talk to us online, if you don't want to talk to us over the phone, you have the opportunity to talk to someone in person by visiting one of our regional and district offices. To find the office closest to you, visit revenue.pa.gov. Please make sure you call ahead though, because we strongly recommend making an appointment. The regional and district offices are open Monday through Friday from 8:30 a.m. to 5 p.m. They are located in Erie. There are two in Pittsburgh. There's one here in Harrisburg. There's one in Allentown, Reading, Norristown, one in Scranton, and then there are two in Philadelphia. So there's another great way to look for answers that we have here. It is our online customer service center. We strongly encourage all of our customers to use our online customer service center. To do this, you can visit the URL listed on the screen, which is revenue-pa.custhelp.com, or you can click customer service icon, which is directly on Revenue's homepage. Here, you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure that the information you are receiving is accurate and relevant. If you are not able to find an answer to your question through the FAQs or general website resources, you actually have the ability to submit a question to the department. This feature allows users to submit either a general taxability question or even a more pointed question regarding a specific scenario to a trained representative who specializes in sales tax. We will review your submission and respond to you within 72 business hours in a process that's actually really similar to sending and receiving an email. All right. And finally, this is one of the bigger ones that we would like to show you guys. This is the Voluntary Disclosure Program. The Voluntary Disclosure Program provides an opportunity for businesses and individuals who have recently become aware of their Pennsylvania tax obligations to voluntarily come forward. So, in return for coming forward voluntarily, filing their tax returns, and clearing their tax debts, taxpayers are only responsible for the payment of tax and interest. Penalties for most taxes administered by the Department of Revenue will be waived when the requirements of the voluntary disclosure agreement have been completed. In addition, taxpayers are only responsible for satisfying tax liabilities for up to 3 years, plus the current year, unless sales tax was collected from customers and not remitted. Unregistered taxpayers with the Department of Revenue who have collected business trust fund taxes but failed to remit those taxes may be eligible for the voluntary disclosure program. However, such taxpayers must remit taxes for all years collected. They will not receive a limited lookback. Penalties will be waived for all years. If a taxpayer is currently registered or was previously registered with the Department of Revenue, they are not eligible for the voluntary disclosure program. Taxpayers who the department has contacted and pursued collection actions against or investigated are not eligible to participate in the program. Taxpayers who are interested in participating in the program should send an email to ra-voluntarydisclosure@pa.gov to request a case number. The email should include contact information. This includes the mailing address, phone number, anything in regards to the account for the person requesting the case. Taxpayers pursuing a voluntary disclosure agreement should not register on their own for the taxes for which they are coming forward. The voluntary disclosure office will actually register the taxpayer at the appropriate time themselves. If you are registered and not currently charging tax correctly, you should correct this issue as soon as possible, as audits generally go back 3 calendar years, and you can be assessed the tax that was due plus interest and penalty. All right. Thank you so much, everyone.
Thanks, Rachel. So helpful. I appreciate your time today as well as your team. I'm going to actually launch a quick one question poll. So if all of you there could give us a quick answer, that would be very helpful. And then in the meantime, as a reminder, I just wanted to let everyone know that I will be sending out the recording today, the presentation slides that you've seen, along with the flyers for the upcoming webinar so that you can sign up for those, the ones that you're interested in. And if you know of anybody who would benefit from attending these webinars, we encourage you to share the resources, the flyers so that they can register as well. We'd love to connect with them. It just helps us to know what questions you have and how we can do our jobs better in helping making it an impact to you and your businesses. Okay. I think we have a few questions, Rachel, for your team in the chat. And since we have a few minutes, I'd like to try to address them if that's possible.
So I'm taking a look here and I see if I should have Stripe collect my sales tax automatically for my virtual courses. I do believe Lisa already answered that question. She said if you are selling taxable goods, you will need to collect the sales tax. You may have to update your settings in Stripe in order for the sales tax to calculate. I would contact Stripe for additional information.
Great.
All right. And what do you do in the scenario where you purchase from a wholesaler a mix of products you will consume as a service business and also a few you will sell to your clients? Do you file use tax for Wait, is that the same person? Sorry, is that the same person? No. Do you file use tax for those consumed if you purchase on an exemption? I am a hair salon. I buy shampoo. Some of it I use, some of it I resell. All right. Diana, please feel free to correct me if I'm wrong, but I believe I'm pretty sure you have to pay sales tax for the shampoo that you use. And then for what you do not use, you can claim resale exemption. You can claim use tax if you used a resale exemption and you use the shampoo. Diana,
Actually, no. What has to happen for the
thank you.
salon industry, you must pay the sales tax at the time that you purchase any of your shampoos, conditioners, etc., that you will use in the business. When you resell them to your customers, what you will do is claim a taxes paid, purchases resold credit on your sales tax return when you file it for that filing period. So for example, if you purchased the shampoos at $20 a bottle and then you resold it at $30 a bottle, you in essence get to recoup the $20 sales tax, the sales tax you paid on the $20 bottle. So you would file the sale of the shampoo like normal, as I sold one bottle of shampoo at $30. That means I owe 6% sales tax on that. That's what I've collected from my customer. But then down on line 11 of your sales tax return, you will claim that TPPR credit that allows you to recoup the sales tax you paid when you bought it for $20 a bottle.
Thank you, Diana.
Mhm.
Am I missing any others? Let's see here.
Yeah, Janet, I'm not sure if you provide one-time services to an organization in New Jersey, I'm not quite sure if she had some open questions before that would add to. Hopefully let me see. But then what about when you buy from a distributor and sell their products? Dana has that question.
If you buy from a distributor and sell their products, once again, Diana, correct me if I'm incorrect, but I believe when you buy from a distributor, you would claim a Rev 1220 resale exemption, and then you would collect the sales tax to the end consumer from the end consumer.
Correct. Correct. As long as you're reselling it, you may claim that resale exemption. You will then collect the tax from the person that you sell it to or the end consumer. And on the one for if you provide a one-time service to an organization in New Jersey, the question would be, is the service being performed in New Jersey? And if so, then it becomes New Jersey sales tax problems. But if the service is being performed in Pennsylvania, then it would follow Pennsylvania sales tax laws. A prime example would be if if a New Jersey organization has a vehicle that needs serviced and they take it to a dealership or a garage in Pennsylvania, because the service is being performed in Pennsylvania, it would be subject to PA tax.
Great. Any other questions? I don't want to sign off too early if there are questions for our team of experts. Okay, seeing none, I am going to end today's webinar, but again, a couple of things. I will be following up with the recording, the slides, and also an evaluation, probably coming in 2 separate emails. Please let us know what you think about today. We're here to help get you the information that you need, and we'd like to make sure that we are responding accordingly. So we'd like to hear from you on your evaluation. Okay, thanks everyone. Thank you to Rachel and to your team of experts. We appreciate it, and we look forward to seeing you next month on December 10th for withholding basics. Thanks everyone. Have a great day.